Hello and welcome everyone to the aftermarket analysis D session as usual. This is an aftermarket analysis session. After the market closes, we look here to see what confirmations we observed in the order flow of Nifty and Bank Nifty today. Where was the interest of buyers? Where was the interest of sellers? And today, we try to read the aftermarket, the footprint thoroughly. All right, to see what exactly happened in the footprint today. So if you are new and want to learn order flow or want to learn how to use GoCharting effectively, you can join this live session every day at 5 p.m. The link for this live session is uploaded on the GoWonk Charting Discount community and Telegram community before 5 p.m. The link is also uploaded on the right corner of the website. You can also join from here through the notifications every day. So before reading today's footprint, let's take a look at the volume profiles once to see what the confirmation was for yesterday's volume profile and the day before's volume profiles. Okay, so yesterday's Nifty was completely sideways, absolutely sideways. Okay, so this was the only VPOC zone and this volume node was formed. So yesterday's VPOC zone was marked, and then in the last 2 days, a zone was created and the value area high of this zone was marked. Then from these playing ranges, whatever this level is, the VPOC zones from the volume profile of the last few sessions are simple levels. There was a simple confirmation from the volume profile. This was yesterday's zone, and the volume node from the last 2 days was visible in consolidation here. It was marked simple. So now let's see what confirmation it gave us. Okay. So now we will try to read the footprint. I have set up the cluster chart. We go to charts, we click on cluster, and this chart will pop up in front of you. Okay. In this cluster chart, within the footprints, on the right side we have buyers, and on the left side we have sellers. The multiplication sign in the middle is used to separate the two. Okay, let's start from the very basics. So now we will try to read the right side footprints. The footprints properly, for which we need help this delta. What is this delta? Delta tells us the difference between the buyer and the seller, like here. If I explain it to you a bit more clearly, you see this value below? This is the delta, like the first candle. The delta value we have here comes out to be minus 22,100, meaning around 320,000 sellers were more. In the first candle, the negative sign here denotes the sellers, meaning wherever you see a negative sign before the number, it means it's delta. A negative delta indicates that the sellers have more power. This information is given to us. For example, in this first candle, there were around 200,000 more sellers compared to buyers. Now, let's look at this candle. What is the positive delta of this candle? There is no negative sign here. So it means this is a positive delta. Inside this candle, there are 17,000 more buyers. As compared to sellers, this gives us delta confirmation. It's simple what delta tells us. Delta gives us the difference between buyers and sellers. So now delta can be of two types, whether it is positive or negative. A positive delta indicates buyers, meaning if any candle has a positive delta, it goes outside within a 10-minute candle. A negative delta means sellers, and the value indicates the quantity of buyers or sellers. Now you might be seeing two types of deltas in candles, whether positive or negative, with deltas of 120,000, 184,000, 250,000, and some candles with just 2,000 or 1,000 more. So some candles have a very high delta, like 200,000, 100,000, and some candles have a very low delta, 1,000, 2,000, whether on the positive side or the negative side. So what we will do here is try to read the footprint of those candles whose delta is quite heavy. Heavy in the sense that if we consider Nifty, any delta above 30,000, whether on the positive side, like this, we will read it, or on the selling side, we will read all of them. And if a candle's delta is less than 30, understand that there has been very little buying or selling. The reason for reading the higher ones is simple. The candle with more buying or more selling is the one that actually has the potential to move the market. Okay, and we will read the footprint of those candles, and the candles with a very low delta do not have the potential to move the market exactly. Okay, so what we will do is read any candle with a delta above 30,000. Sorry. So let's look at the first candle. Okay. In almost 50% of cases, you will see a very large delta in the first candle every day. Like here it is 221,000 and we need to read above 30,000. Okay. But if the first candle gives any confirmation above the levels, whether buying or selling, then you can consider it. Otherwise, you can skip the first candle. See how delta is helping us here. This was yesterday's VPOC zone. Okay, it broke this weak zone with selling, which means a text is coming out. Sorry, Omai. A build is there that it broke yesterday's VPOC zone and there was selling, so that means we can now consider it. This will be quite helpful for us. Okay, so now how will we read the footprint? First, we looked at the delta, which is above 30,000, who is more powerful within this candle. As per the delta, the sellers are powerful, so we will only read the seller side because there are more sellers within this candle. Okay, which side is the seller's side? The left side. Which side is the buyer's side? The right side. So what will we do? We will pick those areas where particular selling has been the highest. If we read 173 to 54 pretty carefully, the first selling at 54 was initiated from here and it came up to here. This means this is the particular zone where significant selling occurred. The next candle again shows data above 30,000, but still, where is it? This is situated above a resistance zone in the sense that, look, there was heavy selling. It took rejection from yesterday's resistance zone. There was heavy selling. And this was the particular area with the most selling where it occurred. Now, if in this case, Nifty moves above from here, then this selling will be absorbed and it will act as a support somewhere. In any case, if it breaks to the downside, that means that this selling was not absorbed this time and it will act as a resistance. In these cases, if we observe any absorption of selling, we consider it as support. If absorption is not observed, then we normally let it be, acknowledging that there is selling. Sellers are more powerful and they can push the market to a lower low. In the first candle, there was significant selling and the price is within the same range. If we look at the delta of the next two candles, there is none within any candle. So, first of all, significant selling was initiated here. What is happening in the next candle? There is no buying activity. It is more than the selling and is also facing resistance. This is the resistance where rejection occurred in selling. Again, no buying is happening. Again, no buying is happening. That's simple. There was rejection from yesterday's withdrawal zone with selling. Price is holding the selling zone. And without any buying activity, 123 small pullback in next candles. There was small pullback and held the market for 10 minutes to yesterday's resistance zone and mainly to the selling zone. And there was a significant downturn observed. Again, there was even more selling within this candle and even more selling within this candle, meaning the initial selling was initiated here. The next two candles held, and then sellers started making the price lower and lower. The delta of this candle is 120,000 to 184,000, meaning even within these two candles, there was back-to-back super selling. So now let's look at the selling zone of these two candles, which was significant for us. And what came out of this candle was 175K. Okay. And within this candle, there was selling of 52K here. See where the most selling occurred. Let's also consider the selling occurring around 42K and 52K at 43K, meaning there was a slight selling here as well. Okay, so what happened in this candle, in these two candles, is that selling started from here, and there was quite a significant heavy selling up to this point. Again, it held there with a positive delta somewhere, but the show strength below 30K is quite low. Again, it held with one more rejection. Okay, there was a good pullback, which was this one. Look, within these two candles, there was quite a significant buying during the pullback, but it couldn't break any selling zone. What I mean by the selling zone is where the seller's money was, where the seller's positions were held well, perfectly held. Look, this is where the pinpoint work happened. Two selling zones, what can you identified ahead of us, one here and one there. During the pullback, where they are being held is where the selling zone will give a good confirmation and can also continue the downtrend. It held here, and again the continuation of the downtrend started. Another selling was observed in between. But look at today's volume, it's around 100,000, like 100,000, 100,000, sorry, around 200,000, again around 200,000, around 120,000. So this selling will not have any impact. If we look at today's volume on the selling side, it is hovering around 200,000. The market, once again, you showed two back-to-back candles in the stock market, which were significant. What happened inside these was selling. What happened inside this was selling of $70,000. There were 135,000 sellers here, meaning again, like the two candles seen before this, and the same selling candle was observed here as well. So what will you do if there has been significant selling? Let's see in which zone the particular selling occurred and in which candle the most selling happened. In this candle, there was selling of 54,000. And again, this surpasses 50,000. Again, the next two candles held. See, there was no buying, negative delta around 40,000. Again, holding, no buying, a pullback occurred, and at the time of closing, Nifty pulled back from here and closed. If we look at today's overall Nifty, what happened is that the first selling was initiated here, taking rejection from the VIP zone. The next two candles held, no buying interest, the selling zone held, and the price started to turn downwards. As soon as it started turning downwards, this was the zone where more selling was initiated, meaning significant selling occurred. The next two candles took a pullback, a downtrend, this time a good pullback, a satisfactory pullback, and a downtrend. Here, another zone emerged where significant selling was observed. The next two candles held that selling zone and a downtrend, and at the time of closing, a pullback came from there as well. If we see a good rejection was taken, showing that the order flow worked perfectly beautifully, where the selling was observed, held, a pullback occurred, and the price held, a pullback occurred, and the price held. In Nifty, the order flow gave solid, confirmations very well. Now let's look at Bank Nifty. Today's scenario for Bank Nifty, mine was completely opposite. If Bank Nifty had also been bearish today, okay, then the market would have fallen even more. As we see, this selling was observed in the first candles, okay, but the market went up from here, so this selling didn't work as much. Now selling occurred within these two candles. If we look at the selling zones of these two candles, 8, 12, and see, this is the selling zone. Here too some pullback occurred, but during the pullback, see the buying strength, 25,000. So simple selling happened. See the delta, buying 10,000. So with this buying, there won't be a pullback. And if we see in Nifty, a pullback is happening. And the delta is also negative, which is a solid confirmation here. Solid pullbacks occurred. And this selling zone was also broken. And significant buying was observed again. See, buying of 21,000, meaning a seller had created a resistance, but the buyers broke it. So a resistance worked quite well as support here, came on the pullback. And now see the pullback delta, 700, selling of 1,000 in one candle. The next candle indicated the sellers were gone, okay. And at the time of closing, again, this zone was broken with selling, but during the pullback, see it broke again, meaning no solid bearish scenario was built in Bank Nifty on the Ibiki order flow. Selling happened, but whatever selling zone was there, it was breaking during the pullback. Seeing this, again, some buying occurred. So this was today's quick analysis of Bank Nifty and Nifty. Now, whatever questions you have, please go ahead and ask